your name says Colby, and then in parentheses it says Killjoy. That's exactly how I set people up whenever I name people in here. Maybe you did that. If so, then I'm rubbing off in a good way, in a good way from the market mastery. Oh, there you go. Yeah, exactly. All right. Oops, what did I just do? Okay. So yes, we are live now on the platforms. And oh, I see myself there. We are. Weird. Here, I'm overlaid and in the bottom left, right? I believe you guys see that in the Zoom. But on the broadcast, I'm in a corner in a white square. What can you do? Zoom, thanks a lot for being weird. So this morning, retail sales came in and looked very strong outside of autos. Uh, and even autos were good, I think. Let me get to the official information on that one. Retail sales. Be nice if you could. Well, they are just X autos. 1.1% month over month increase, which is huge. Previous month was 0.6%. We were forecasted to do 0.2%. So this is a big surprise. A lot of spending going on, a lot of people buying out there. Normally, I don't know why, but normally that would spook the market because that is a sign of inflation, of more inflation. And so therefore, um, if there is inflation, then we can not only go for later interest rate cuts, but we might even see an increase, another hike. So the market, although, is responding favorably, and you just got to go with the market. You must trust the market. The market is our God. The market can remain solvent longer than you. No, what was it? The market can remain irrational longer than you can remain solvent. So, you have two choices: follow the market or go broke. Those are the two choices. Because the market always the market always wins. The market is still here. Not everyone is. All right, so yeah, it's been a favorable reaction to that information. The dollar is strong. The VIX is retracting, which is good for your index, if you want to call it that. The growth market and the SP 500. So this is kind of across the board. Everything's up. But interestingly enough, also interest rates are up. But that's, like I said, I, think that more spending can drive inflation. So there's going to have to be, I don't know, there's going to have to be some monetary policy magic work done over the next 9 months. If any of this continues. However, an increase in GDP, which would cause an increase in spending, would cause an increase in GDP and would cause an increase in wealth creation, would pay down the debt, and would actually create deflation. So it can also be a positive. So this is a positive metric, I'd say, moving forward. And if ER season turns out to be surprise beats overall versus neutral or surprise misses, which I think it's going to be surprise beats, just because that's where we are sort of economically, then I think it just really kicks off support in the market and potentially runs and good trades and good swing trades and longs, bullish positioning. But we're gonna have to take it, during ER season. It can be a wild ride, so we'll have to take it one week at a time. Let me see what we have here on the horizon for earnings this week. for the week of April 15. All right, here we are. Most anticipated is today. We've got Goldman Sachs, Charles Schwab in this morning. So GS and Schwab, SCHW. Looks like Schwab is slightly down / neutral. Goldman Sachs up, way up. Goldman Sachs did quite well. Tuesday, Bank of America, Johnson & Johnson, Morgan Stanley. Here's Randy with the request to record. There you go, buddy. PNC, a lot of banks. And then after the close on Tuesday, you got airlines coming in, United. And then we also have Interactive Brokers, JB Hunt. So, mustard and ketchup. Wednesday, ASML, Abbott Labs. And then Wednesday aftermarket close, you got Sands Resorts and Discover. That's another bank. CSX, Alcoa. Okay, Thursday is when Netflix gets into the mix. But in the morning, it will be Alaska Airlines and some more banks. But after the close, Netflix. Yeah. Oh, JB Hunt, the trucker. Gotcha, Carl. Thank you for the correction. Looks like the same damn logo. Well, anyway, Netflix after the close on Thursday, and then American Express, Procter and Gamble on Friday. But Netflix will be one of the more interesting earnings releases on Thursday. So this week we still have room to get on the runway, to get out there and get positioned. And then next week, I'm sure we're going to see some bigger names like Apple and Microsoft and Amazon and the likes. So this is our last week to get ready for the earnings season to really push hard. Because you used to trade in the old days, it's a utility now. Of course, yeah. All right, so yeah, the market reaction this morning to retail sales was very good. Let's see what we have up in our growth list. Pre-market here. Howell only up a smidge, 6%. How about over here on our gap ups? MPW, $2.4 billion company at $4.9 is up 23%. That's MPW. All right, well, I don't like how it trades, and it's not really quite there as far as a pivot reversal yet. So this is somewhat of an insignificant move. And also, all right, well, the ADR is 5.5%, but that is because it's practically a penny stock at this point. That's Medical Properties Trust. So we really don't have a whole hell of a lot. 10%. All R is up 10%. We don't have a whole hell of a lot up this morning yet, other than Goldman Sachs. And it got really volatile lately. Let's see. Let's go take a look back at the daily chart on Goldman Sachs. I mean, nice move since late October, November with the market, and then sideways this whole time. A little bit of a push, and then a fade before earnings release, and now earnings release, and it actually turned out to be good. So that will probably cause a surprise purchasing this morning off the open in Goldman Sachs, but it is only a 1.85% ADR bank stock, essentially. And so if you can get something out of it, great. But yeah, I expect that could be bought up and be green all day and be supported. That's what happens in gap theory analysis here. That's what happens when you have a sell-off before earnings, and earnings is a surprise beat. Everybody's like, oh shit, I thought we were going down. And so it gets bought up pretty heavily. Now, that's not a short thing, obviously. Nothing's a short thing, but that's usually the majority prognosis. All right, we've got about 12 and a half minutes before the market opens. And All right, Killjoy. I wanted to go over this Boeing chart with you for a second. Couple of things I note. So let's just take off all indicators here. Okay, there we go. Just go with the raw chart. You were looking at the weekly chart. I think that's not necessary for, like you said, a couple of weeks swing trade. So that's the way swing trades should go. You should be in them for a couple of weeks max. And if you ever get a single day that's just really good, you should just take it off right then and there. What you might call like swing scalping. So you don't need to look at a weekly. So here's the daily, however. And what I notice, one of the things I should point out too is on the bottom right here, you got the ADR is 2.3%, so it's a bit slow. And another thing to look at is ER is in like 3 days or 4 days. It's probably Monday of next week. Well, it says right here. Let's see. Wednesday of next week. So that's not really enough runway for a typical swing trade. You got ER coming up. You want ER to not be in the middle of your swing trade. So those two things alone say, skip it. ADR percent is low. It's going to be slow. So if it does make a move, you won't make a very handsome profit. And it's like going out in a whale hunting boat and catching anchovies. Oh, you're talking about ER coming up. Oh no, you never want to. Yeah, maybe after ER. Yeah, I was going to say you never want to get in and guess ER and be in for ER. That's not a good idea. Just to be clear on that. All right, so then clear this up here. But look at this. This is, I think, from a technical analysis standpoint, it's important to note. So you had this move here. Yeah, this is important to get right here because this is what I want to show you. So you got higher highs after higher lows. However, that just changed. We just broke down on it, and so now it is it is well, it's negated the bullish trend there, the sentiment being higher highs and higher lows, and now it's negated that out. And so, as of the moment, we can't. Yeah, that was throwing you off. Yeah, and then when that happens, well, that's what it is exactly. It's a pivot breakdown. Whenever you have this is a pivot point when it has a shape like this at the end, like a V. um, when you have a pivot breakdown of an uptrend, it negates the uptrend, and now it's becomes almost a megaphone pattern is what it can be. And you can get a widening type of move like that. But in general, what happens is it means it's sideways. And so trades in it become very sideways-ish. And so, it may go up to the top of the megaphone, but once that breaks like that, it can go into long periods of nothingness before it even gets up there. And then finally, maybe it gets up there. And it's just the whole thing's going to slow down. Momentum certainly got killed. Let's see. Let me delete that. And then, but with the earnings and all, yeah, that's an okay point, but that's an issue that it broke down recently. However, now that it has bearish sentiment, what if earnings are a big surprise? What if we keep plummeting all the way to earnings? I mean, that's sell off, sell off, sell off, negative bearish sentiment, right? And then earnings comes up and it's a huge surprise. Then you have with gap theory, everyone's going to cover the short. Everyone who was short is going to be covering. There's going to be buying. There's going to be, this push up, and it probably would create a never look back stake in the ground, green candle catalyst day type of situation. And it's probably in that situation would have higher ADR percent, but that will slow down and it will resume its natural movement again. And so maybe you get a 1 day trade out of it. I might look at it for PCS when that happens to see if it actually would give me 25% ROC on a 20 delta. But I probably would not want to put shares into a 2%-ish ADR stock because it won't provide enough return on your capital to beat the market. Anything under 3.6% ADR, if you were to invest in it, it wouldn't necessarily beat the returns of a strong market. And so you might as well be in the market. Like, in other words, it doesn't beat just saving your money and putting it into an index fund, right? Whenever we're below 3.6% ADR. So when we pick stocks that are below that, we're underperforming what we could do, which is a whole hell of a lot easier, which is just to throw our money into an index fund and just let it sit and just keep building that and save that for the next 50 years, forever. So that's why we try to stay away from low ADR stocks. And I think that's pretty much the total prognosis of all I really cared to show you this morning. And also, look at this. This is relative strength index, this line underneath there. This is shows you the comparative performance return when compared to the market, the growth market. And you can see that it broke down in relative strength at this pivot point here, right? On the relative strength drawing. It didn't happen over here. Did not happen over here, but that's called divergence. That means you're getting a conflicting, pattern. It's not about that, like, it's a lower angle. Like, this is important when understanding divergence. I think we were going to go over divergence this week, by the way. Like this angle here and this triangle, if you will, and that it's a lower angle. And then when you compare it to the same exact points on the other one, and that this one is going up. Yes, that's divergence. Yes, that's divergence, but that's not the real amazing, strong, important point here. The important point is this has not broken down its pivot, but this one did at that point. And that's more than just an angle of that's diverging angles which could be a different dial setting of strength. This is the overriding sentiment on an underlying analysis showed up as diverging negatively. And that's serious. Anyway, will it hold? Well, yeah. I mean, at that point, it turned out to be yes. And if you can find that with RS, not RSI, RS, relative strength of the market, and you can get those graphs on your screen at the same time, you can get some really great readings. Like, I mean, the whole time it's been moving down, here, while this one was moving up, and it never even made a new high when this made a new high. And so it's weaker, much weaker than the market. And then when it broke down here in relative strength, that was right back here. And so of course it was going to not do well. And then it tried, and it did, potentially make a difference. But now it's, I mean, wow. I mean, look at it now in relative strength terms. So it has a long way to go, even when it does get stronger, even if it were to pop up here on earnings, it's vastly underperforming the market. That's another thing, is that you can use that relative strength line like that to see how well it is performing versus the market itself. See, again, you don't want to be in any stocks if they're going to underperform the market, because then we can just quit our jobs and we can just put all our money in a yes, add that to your tool of tricks there. Relative strength, divergence. But I mean, even if you can't see that, like, even if you couldn't get that to overlay, you could go over to like QQQ and you could say, okay, on those days, or the Dow, some index, on those days between there and there, which appears to be like end of January and end of October, you go over to QQQ and you say, well, was that a high or low, or or whatever? QQQ, end of January. Well, anyway, uh, the Qs are not exactly, well, there you go. I mean, the Qs were, aren't the Qs, but let's go over to the Dow, because Boeing is more correlated to the Dow. The Qs or the Dow, the market itself was just on fire, and it was going. Boeing was going down, so that's anti. That's going. I mean, you don't need the drawing underneath per se, except for those precise divergence measurements. But the cool thing is when it comes to divergence, so long as you're getting an anti reading, a completely different reading from your measurements on one instrument that's supposed to correlate and compare to the ticker you're looking at, then that is divergence and a significantly a material divergence that you can work with. uh, it doesn't have to be like you don't have to have them on the same page and drawing the angles again because yeah, those are maybe differences in strength and changes the dial. But when something's breaking down in pivots while the other thing is not, I mean, or going the other way, I mean that is you don't need a tape measure for that. So you can do this, just eyeballing it sometimes, often. The eyeball ones are the better ones. Anyway, Carl says short it. Yeah, don't do anything before earnings. Let's see how earnings plays out. And by the way, because it's way, way, way down going into earnings, if earnings were to be even a surprise miss and it gapped down, open lower, because it was already going in that direction, that's nothing new for anybody. And people will cover their positions and take profits. Very interesting. Gap theory analysis is very interesting in that way. Since it was already going down and bearish, if it gaps down, it levels out or even goes up. It doesn't go down. Strange, but true. If it had been going up and up and up and up and up, and then it was a surprise miss and it gapped down, then everyone's panicked and it sells off and it would be selling off for days. So gap theory analysis is very interesting. I don't know if I got that class up there. Uh, Killjoy in the Market Mastery, but we did a very nice gap theory analysis class or classes, and damn it, I got to get those edited and up there. I think it might be up there, maybe, maybe, maybe. All right. Well, anyway, we got 4 minutes until the market opens. That was the Boeing thing I wanted to point out and show you guys. What about Lockheed Martin? Lockheed, I forget the ticker, LM something, LMT. Yeah, I was expecting that might be getting hot with things getting hot on the global stage. Sometimes don't pass is the best bet. Okay. We've got a gap up open over a pivot in what appears to be somewhat of a uptrending move, a rally over the last 2 months, but it still needs to break out, and we've got earnings ahead of it. So, and look at the ADR. Very important to know. Always look at the ADR. 1.18%. I mean, you can't make money off of really Lockheed Martin like that. You know, um, not like that. You just put your money in the market, you'd make more money. All right. Let's see how the market is holding up going into the open. Goldman Sachs is holding up. That's all that matters this morning, really. And the market is up. Basically, it's going to open above Friday's high, which on the Dow DIA creates a signal. It's an odd place to find trades, though, because mostly those are the industrials, and those trade slower, like Caterpillar. And so the ADRs on those 2%, a lot of slower stocks, but you can find a leveraged Dow uh, ETF. But if you wanted to go PCS on it, which is an interesting way to take the trade, you would have to be very liquid, the options. So the Dow is already one of the lesser popular indexes to trade. It certainly is an index to watch. It's one of the most popular indexes to watch. But um, it's just not as well heavily traded as, say, SPY or QQQ. And again, trade QQQ if you're going to trade in the index, and ideally a leveraged version of it, TQQQ, so you can get out of the 1.15% ADR on it. But QQQ returns 30% more return than the S&P 500, such as SPY or ES. So you want to go with NQ or QQQ or TQQQ when you are trading. Yeah, we need to be on the right. There we go. All right. With 2 minutes to go. 2 minutes to go. Let's get back into my feed here. I'm going to be very curious to see how growth stocks are acting from the open. These meters will tell us. I don't know if you can see my mouse, but these 3 meters over there. It'll take a second to draw them since we've got a second. And this one is the most important one. So, I just judge it, like this one looks like about 94.3%, bullish. I mean, bearish. It's very red. Anyway, from the open though, we'll see the change. This current metering does not reflect where things are gapping open or any of the picks. It has to wait for the market open because Thinkorswim's a fucking ridiculously stupidly programmed language, and it's very hard to get around that. There you go. That's why. Program. Did I say language? It has a very terrible programming language, ThinkScript. Well, the program language is okay. It's just that the limitations are fucking ridiculous. And it's been 25 years of trading with this app, and it just never changes. Let's see if maybe the switch over to Schwab. Yeah. Let's see the switch over to Schwab changes anything. That's going on. All right, we got 30 seconds to the market open, and it definitely is perking up strong. But you know what? This whole thing could just start selling off. I don't know. And Randy, by the way, watch out for your puts. I've got puts on the Dow and SPY, and we'll have to see how the day starts playing out, and if I want to just cut those and let my other positions do their thing. That's part of capital management here. Here we go. The open now. Fell off right away. And by the way, rates are hitting 4.7% now. So they're up from GF, skip GPS. They're up from 4.6 all the way to 4.7. So unless they start having some relief, I'm probably gonna have to hedge that. In the meantime, it looks like the Qs are dropping. So is SPY. Let me pull up TIA. We are now 45 seconds off of the open, and it's looking neutral. Do I think they get back to 5? That'd be cool. If they do, I'm buying. I'll be a buyer for sure at 5. I might even double at that point. All right, while the market is kind of testing, selling a little bit, I will try to release some of my hedge since it appears we might be bullish this morning with this green move. Although the higher rates do affect things. But I'm going to take this slow and steady. I'm watching everything here. Rates, the Qs, VIX, SPY, gold, oil, and the Dow is doing great, as it should. The industrials, base materials, and typically financials, which, yeah, they are doing good. And rates go up in this situation. And what was I going to say? And financial and utilities are up, which is a sign that there's some rotation, some sell-off going on in the rest of the market, in the non-industrials. Some rotation down, which makes me want to cancel my order. Let's see if I can get it canceled before it gets filled. It's right there. I'm 1 penny away. All right, good. I canceled it. I'm going to keep my puts on for the moment while utilities and staples remain a bit elevated. All right, my D dog's at 92%. Let's see if I can get rid of that. But let me take a look at the chart first. D dog. Yeah, good. Yep, I'll take that. We can sell one today for penny under. If I get a penny under, I'll do another one. A little bit less. Okay, no takers yet. Okay, but I'll keep that there. Penny under. Oh, NTNX is in great shape. Let's see what's going on there. Is that just an anomaly? Yeah, I think that's just an anomaly. Okay, app. But I mean, I could take advantage of it. Might as well put an order out there. Likely not going to get filled. App also doing well in my holdings. Okay, fine. Another look at the market reveals pressure, definitely under pressure. The Q's dropping most strongly while utilities and financials and industrials and base materials and rates and all the inflationaries essentially are going up. And so tech is getting hit. SPY's going down along with tech because a lot of the S&P 500 are technology stocks, but it's doing it in a muted and less so fashion because I've said many times that S&P 500 also includes a lot of value stocks, certainly financials and industrials. That's the whole mix, and yet it is going down. So the pressure is on. The only thing somewhat holding was the Dow, and that's about to reverse right now as well. It looks like. But financials are holding strong and utilities as well. How about healthcare? Yeah, healthcare staying elevated. That's another defensive stock sector. And rates are holding at 4.7 and change. Let's see if there's anything else I need to take a look at here. Oh, I heard DJT was going to be down. Let's take a look at that. All right, see, look at these meters, right? From the open, a lot of our favorite growth stocks are mostly either holdings neutral, slightly bullish. Well, the outlook's somewhat slightly changed, right around neutral though. And what I wanted to do is I wanted to show you that when we want to take a look at anything that's way up over there. So we got IQ at the top of the list. Okay, it's doing strong and doing well, but it's not a good trade and it's not in formation. XS, not in formation. Next Gen Energy, beautiful bullish run it's been on. It's up in relative strength this morning. However, uh, it's not really a trigger point. It's kind of here nor there. AUR, no. AFRM keeps pulling back and pulling back. Hasn't turned bullish, and it looks like that it won't turn bullish, perhaps until ER. It's waiting for ER. ELF, Alpha's going sideways. It's found support, but that's about it. And it's not necessarily good this morning. Dig, no. Kava. Kava had a nice bounce off its 50 a couple days ago, but still hanging about halfway into the drop. Alcoa. Earnings coming up. We talked about that earlier. Can't really do anything till after earnings. Para, not set up. VNO. Not really interested. Rig. No. STNE. STNE. No. Dell. No. CCJ. The setups are not triggering. Things are set up, but they're not necessarily triggering. And that can be a sign that there's nothing really happening. Big AA, Dell, DraftKings. I think I'm in that one somewhere. Maybe not. Oh, it says that you are. Wink, Randy. But that this move is helping you. Should be putting you closer to break even again. I don't know if I'm still in that. Let me double check. No, I closed my position. Ideally at a profit. Avgo. Let's see. All right, I'm going to sort by PL day. Okay, SE is one of my top performers of the morning. Okay. ANF. Right. Airbnb. That should be doing better, but I guess volatility is rising as earnings are approaching. Nvidia doing fine. Eli Lilly doing good. Applied materials trade. Oh, that's progressing nicely. I don't have my ECS drawn on that. All right, let's draw that now. The trade was made on the 11th, about an hour before close. 11th was right here, hour before close, probably like right around there. And that's June 21. 185, 180 for a credit of 70 cents. So 184.30 right there. Boom. Template ECS. Boom. I like to see when I pull up my charts, I like to see that break even line so I know what's happening. EFM. Internet here at this new place is so much better than the other place. You guys notice that? I mean, that's like a huge improvement. What's wrong with the other internet? TSM is doing fine. Marvell. All right, let me take a look at stocks of mine that might not be doing fine. Costco. Oh yeah, see, I have a call credit spread on that, and it's doing well, the stock, and so that's going against me, and that's at 100%. So that's on the chopping block for me today before breach even. Netflix earnings is coming up in 3 days. Okay, yeah, I have a Iron Condor on Netflix right now, and I'm gonna sell that right before earnings. Anything you want me to look at, guys? JPM. From the open, I looked at a bunch of stocks to see if there was anything signaling, and there's really not much signaling, which is revealing. Shot, no. SMMT, ADAP, GCT. Like, it's not that a lot of stocks aren't set up, they are. They're just not triggering. Today's not a trigger day. it appears, and it doesn't look even close. So maybe we need to see something more in the market this week. Well, the market, let's go take a look at that. The market has retraced, the growth market retraced halfway up, S&P 500 almost all the way up to the open, rates remaining elevated. The Dow is actually at the open. So the strongest, the strongest index still remains to be the Dow Industrials. Utilities have retraced a lot from their move. Financials are holding a bit stronger. Industrials are simply the strongest today. XLI, the sector XLI. Let's take a look at that chart and see if there's any setup or something signaling over on XLI, because that could be an entry and something we can get into potentially. I mean, it is a signal moment there after a very strong move and very strong flagging twice. We've got an entry signal there, but we're not green on the day. You want to be green on the day. You want a green candle. You want to be, you don't want to enter on down days. Any suggestions for the hedges? Uh, it's still remains to be seen. Rates are elevated and slightly going up. I'm going to keep my on for another 30 minutes to 4 hours, somewhere in there. The window here, we need to watch it a little bit. Will this market take off, or will we go sideways from here? The Dow does remain a signal, and it is green, but not necessarily XLI. Even though XLI is stronger in relative term strength, the signal is not quite there. But it is on the Dow. And let's see if we can find the Dow, like a leveraged one. Dow Lev. Anybody know the a Dow leverage symbol? I'm gonna look it up if you guys don't know. Abdul, good morning. At 300%, Dow is what? What's the ticker? UDow, Ultra Dow. Let's see. UDow. Morning. Ultra Dow. See what the ADR shows up on this one. 2.4%. Even at triple leverage, it can only get to 2.4%. I don't think that sounds right though. That must be double. So what is the triple one here? Let's see. Okay, all these are 3. Okay, that'd be, well, that's not a Dow though. These are all triple leveraged. Uh, SP. Okay, there just isn't one. There is a financial sector, FAS. Financials are doing pretty good today. ADR is 3.2%, so that's slightly tradable. And it seems the banks are doing okay with Goldman Sachs reporting. Surprise beat. Alrighty. How many minutes off the open are we? 16 minutes off of the open. We're still fairly sideways in prognosis, but with actually rates are going up a little more, 4.72 now. So rates are moving up, and that's going to add more pressure to the market. Boy, there they go. I'm going to have to um, hedge my rates, my bonds. So I got to do that right now. Find a liquid strike here. I do that with TMV. It hedges my bonds perfectly. Okay, that's what I'm doing right now. But make sure you buy the right one. Okay, there we go. Thinkorswim, difficult program. All right, hopefully I get my hedge in this moment here filled. In the meantime, let's go back into the group. It has been a good morning. Hopefully that helped you out, Killjoy. And everybody, I'll see you back in the group. And this week we'll cover divergence more in a masterclass. Cool. All right, everybody, signing off. Stay safe.